minutes. In other words, it should be 1 hour and above. When you go to 1 hour and above, you have to zoom out to the lowest. Zooming out is like reducing your chart to the lowest. Till you go further, you can't zoom in. It's zooming out. Zooming out is like that. What is English? What is English? How many of you have been to the US? You've been to the US. How do you pronounce Hyundai? Hyundai, that caption. Hyundai. Do you know it? I know that. How do you pronounce it? It's called Hyundai. English is complicated. See, at some point you need to cram English. Am I like? It's the one is instead of saying literature, literally, they say lira. Okay. You zoom out to the lowest. Yes? You zoom out to the lowest. When you zoom out to the lowest, that's when you can ideally, you do the same. Do the same. To the, any currency pair that you need.
So that means that so that
you can literally view this.
lot of data.
Yes. You can literally be in position to spot, you know. You can literally be in position to spot the turning points, right? And here it's then you can also be in position to identify that this is the head and shoulder, this is the the first shoulder, this is the head, this is the second shoulder.
So
you get it?
Ought to be close to each other.
This is, you should also note this. For this one, specifically, okay, there is this line that you have to draw, and it has to touch these two bottoms, right? So regardless of whether it's trending downwards when it's touching the two lines, right? Or upwards or straight, rather horizontally, it doesn't matter. What we need is to draw this line, and this line is called a neckline. It's called a neck. Now we've done like this, and the neck is only joining this neckline. It's joining the two heads.
So shoulders, I mean that price value.
The shoulders are so accurate that in a way, somehow. Dr. Sega is asking this. Should this be the same price, same point? They shouldn't be so accurate. However, for this setup, which is a head and shoulder, we can only get it from 1 day time frame and back.
1 day.
Yes. If you ever get something, however accurate as it may be, let's say in 1 hour, or in 30 minutes, or in 4 hours, like this, and it is so accurate, please don't refer to this as what? Head and shoulder. There have only been a few scenarios, if not 2, 3, where they have had the what? The head and shoulder. And it is believed that the person have not gotten one, right? But it is believed that if you ever see this, it's a sure deal. There's nothing like 100%, but that's what they're saying. There have only been like 2 or 3, okay, of these setups ever but daily, one day time frame, or the daily time frame. But most of the times it has occurred, it has been going as per this direction. And this reason is why I said this is the only way back straight. Because just assume if you're in a daily chart and you spend like 3-4 months selling before you know the direction where the market is going, and your position yourself already there. And let's say the market moves 2,000 pips, whereby each pip you're risking, let's say $5. How much are you in? Just simple statistics.
Yeah.
2075, that's about 10,000. You just holding on that position. Just giving you what happens. Because it's a long time frame and you technically know the general trend of the market. But you can only do that if you select a pair that you're going to trade in, you zoom out to the lowest, then after zooming out to the lowest, you can ideally spot turning points. And it's from these turning points you can get the head and shoulder clearly seen. Are we together? Mainly here you have to be in the daily chart. That's when you can only spot these turning points. After spotting these turning points, the next thing that you're supposed to do is to draft the neckline that at least has to touch 2 bottoms that make up the 2 shoulders. So regardless of whether it is 0 degrees, whether 20 degrees, 30 negative degrees, what I'm trying to say, whether it's trending or horizontal, it doesn't matter any degrees. It has to be touching these 2 points. Then, after drawing your neckline, you write it. Then you need to determine your entry. And your entry is always slightly below or slightly above the neckline. So you see, there's nothing like any indicator, any oscillator. So you're going to come at this particular point here. After the break of the neckline. So at least for you to confirm that this is a head and shoulder, let's say you're lucky and you get this, at least you need to have the first head. The second head has to be, of course, higher than the first shoulder. Then we can't jump, we can't handle forming, it shows you some sign. Maybe by here, you then certainly be sure that this could probably be head and shoulder. So when you have this, then you have slightly part of this, then you're certainly sure that this is head and shoulder. So you do not certainly stop here. You just come and draft your neckline, touching those 2 points, bottoms that make up the neckline, rather the shoulders, right? Then when you draft it, then you're in position to know where your selling point is going to be. Usually we deploy pending orders here, right? We deploy pending orders here. Yes,
the take profits. So some people measure from neckline to
the highest peak.
the highest peak.
Yes, like Doctor is saying, if you want, let's say if you're entering here, you certainly need to know where should I place my stop loss. Okay, going to know. You know that you press it your way. We get this distance, the peak of the head. We measure from the peak to the neckline. Let's say if they are at 2,000 pips. This 2,000 pips is drafted as our take profit from our entry point. It means that you also come from here and measure 2,000 what? 2,000 what? Pips as your what? What's the pillows? Take profit. Tino, take it. This year. During the year. Nations. During nation.
Now
Kenya.
So the stop loss,
Okay, fantastic. She has responded.
she's on in the south. So the stop loss is where?
The stop loss. To get a stop loss, we just divide this by 2. In other words, half of this should be where our stop loss should go. At what? Let's say at 5, at 1,000. From the neckline. Is that clear?
So that is for if like if you want to put the position for like a man.
That's if you're lucky and you get this second. Usually, we may not count this. Let us rush to what maybe we can do. And the inverse is the same, right?
Yeah.
Right? Yes, the inverse is for the buyer. So you having something of this nature. Usually they do like this, they come and they break, then they come. So we can buy at this point. So it's the opposite of this. Okay, now, do you have any questions here? Catherine. Catherine. You don't know Catherine?
Wait, no, I've just realized she's not here.
Sure, is ask. If you ask questions in my class, I've always known.